Hey guys, Ron here once again. On this video, what I wanted to cover was how to find stocks to trade. How do I find these setups? How do you find these setups that when they come up, like this one here? How did I know, hey, let's go short when it goes like this? Hey, how do we know to go long here, etc., etc.? It's just, what do you do? And the one thing you have to do, guys, is just stop overcomplicating your life. The first thing is you have the tools available to you. I mean, Thinkorswim, for example, has a plethora of watch lists here that already come with the platform. You don't have to overcomplicate yourself. You don't have to overcomplicate your life. For example, here, this market movers list here. You can put it on the side here, and this is how easy this works, guys. Let me go ahead and load this up here. Let's see, where is it? Markets, public, sorry. Public, here we go. Market movers, market maker move stocks. Here we go. So that's a huge list there. So this is how easy it is, guys. And if you're looking to find something for an end of day play, even for the morning, this list is usually going to be pretty populated right from the beginning of the day. So you don't have to complicate your life. You can just go ahead and add it to the side here. I like to sort them by volume so that I can just pretty much go down this list. And this is what I'm doing. I'm going to load my daily chart. I'm going to click on the first one. And all I'm going to do is just go ahead and press down on my arrow key. And I'm looking for things that just can't be denied. All you're going to do is just go ahead and go down and just click on these arrow keys on your keyboard or your mouse and just go ahead and start going down. Let these charts load until you see something that you just can't ignore. Especially when things start to match up with your indicators, look for those patterns. Pick a pattern, whichever pattern you like. Here's an example snapshot of one I found online. Keep an eye on things like this. Keep an eye for patterns as they arise. And here's an example of a pattern. When you're looking at this indicator or pattern recognition's image, you can see, hey, look for these patterns and then make a decision whether you want to take the trade. When looking here at PFE, what is this, Pfizer? Look at this pattern here when this pattern was formed on February the 1st. Would you have taken this trade is the question. So if you're looking at this pattern and you see what's going on here, so for me, I'm looking, hey, the RSI is pretty, it's at overbought levels or overbought, yeah, definitely overbought levels. And it's starting to reverse after hitting the highs on the Continental RSI here. And now both of them are over the levels that I like to see, for example. How was the sell volume? It looks like it was a 50-50 day. So it's like, hey, and now we're bouncing off of a 50 MA. I'm like, you know what? I like this. So this would have been a great end of day play. And if you didn't want to take it at the end of the day, you could have took it the next morning. And obviously, this is one of those days that you were just right straight from the beginning and you had no reason to get out of this trade. Literally, you went in, let's say you went in short. I mean, this thing just sold off all day. And it continued lower for the days to follow. Look at this. There was no reason. If you got in here and you got in at the 45s in the money, you're deep in the money. So there's no reason for you to get out until you get a signal to reverse, maybe down here at these lows or something. But obviously, look at this. This was a pretty nice multi-day run. Obviously, Pfizer is a cheap stock. It's a cheaper stock, so you probably wouldn't make as much as something that's bigger. So that's another thing I like to look at. But if you did shares or if you did do options, you could have went a little heavier depending on the stock, obviously, because they may be cheaper. So you may need to go a little bit heavier compared to just doing one or two of Amazon, for example, right? So again, you just continue down the list and you're looking for patterns like this. Look at this. Okay, so what do we see here? This is NVIDIA. Right, we have a double top forming, and what do we have forming here? Nice little doji. We have the RSI. Look at the volume is only at 49, so depending on where this ends today, if it ends over 50, preferably over 60, hey, this may be a good play. Another thing is you may want to look at tomorrow. It's like, you know what, I'm not comfortable taking this today, but let me see where it opens tomorrow. If tomorrow it opens lower, then I may take a short. And I'll have that bearish bias for the day for this one. Obviously, always remaining objective. Don't fight it if it starts to go higher. Remember, if you're wrong, you're wrong. Just get out. But hey, if I get in at 183, 185, let's say the 185 puts, That's my stop, obviously, because if it breaks above 185, I want to get out. But hey, I take the 185 in the money puts, and my target is at least down here, let's say 172 to 170. That's a nice risk to reward, guys. Hey, you're risking what? It's at 183, a $2 move for almost a $15, $12 to $15 gain. So here's a perfect example. Hey, I just found this one today. Hey, I'm gonna keep an eye on this. I'm gonna write it down on my notepad or put it to my daily watch list. And here's a perfect example. So I'm only down what, the fifth or sixth stock right now. So let's go ahead and move on to the next one. All right, and all you're doing is just gonna go ahead and click down until you see something that just undeniable. And again, you can match it with your indicator set. What indicators are working for you? So let's take a look here. All right, and we're just gonna keep going down the list until you see something that just can't be denied, guys. You know, just keep going down the list. All right, so what do we have here on Coca-Cola? We have possible def cross forming here. So this is another one you may want to write down. Again, this is below the price I normally trade when it comes to options. But again, hey, this may be a good play. We're coming into a bearish crossover here, potentially. It gapped down. When was this? On February, and it's having a hard time. So this may reverse from here. It's hitting obviously this resistance level, and if this opens below this 200 MA tomorrow or in the next couple of days, you may look to take this short down to $44, obviously. So this is another one you may want to write down as you're going through your list. All right, here's another one forming a doji, and I do like dojis, guys. These are just for me, this is like, you know, show signs of weakness, especially when going higher. And or going lower, you know, so it's just a point, hey, let me keep an eye on this. And then you look at other factors. So, you know, are we hitting any resistance here? What are we looking at? So now it's, if this is trading in a range, okay, well, how much of a move is it gonna make? Okay, so let's continue going lower and just go ahead and go through the entire list. I mean, this is not gonna take you long because obviously there's only so many that are gonna be forming good patterns, you know. And then what you're looking for is either reversal patterns or continuation. So if you're looking at Walmart here, let's go back to Walmart. All right, so Walmart, when I'm looking at Walmart, what I see here is a continuation. So it's like, you know what? I like Walmart. And I like Walmart from this candle here. You know, if you guys talk to me on the one-on-one coaching sessions, you know this was a black candle set up here. And this is one of the ones I like to point out because look at what happens when it does this. Boom. Same setup here, another black candle. But this one is a continuation. This was a black candle formed yesterday. And this is a continuation. Obviously, today was a nice down day. So if you took Walmart short, today you obviously had a good day if you held on to it and didn't get squeezed out when it tried to go higher in the morning. But look at this. This is a continuation candle. And for me, what I see here is like, hey, man, this may actually continue lower. And on a longer basis, you may actually come back down to this area of 93, 94 here because Walmart is having a hard time. And then look at the bigger picture. Okay, what is it forming here? Does this resemble anything? Looks like kind of like that. This may be a head and shoulders here, right? And this may be the shoulder here about to drop off and hit this 200 MA, which is probably going to be lining up by the time it hits it with this support area here, guys. So that's exactly what I'm looking for. So here, this is not a reversal, but this is more of a continuation. I'm like, okay, well, this may actually continue lower. So again, writing down Walmart. So far we have three, you know. So now we got Walmart, you know, added to the list of potential plays that you may want to take either today, by end of day, or tomorrow. So let's go ahead and continue lower down the list. All right, let's see if we find anything. All right, let's see. Obviously, you want stuff that trades and with decent volume. I personally like things that are over $100 just because they move more. As you can see here, their daily trading ranges for the most part are bigger than the average. Obviously not this one, but that's one of the factors or the things that I'm looking at. And I'm looking at the volume also on the put side. You know, how much volume do they have on the puts? Because I want something that with a lot of liquidity that I'm going to be able to get in and get out without any trouble. All right, so we continue down the list. And this is it, guys. It's simple. Don't complicate your life. You know, it's there is no rocket science. There is no magic sauce. There is nothing. All you're doing is going through the charts. Just go through the charts and find patterns. Look at this one here. on Berkshire B shares here. Look at this pattern. Broke above the 200, formed this beautiful pattern. You should not have hesitated to take this trade here at all. And obviously, this would have been beneficial to take at the end of the day because of the gap down. You know, so had you opened it in the morning and it reversed higher, you would have got stopped out for obvious reasons and went higher. But if you got it here and you got the 205s, obviously Berkshire Bs are a little bit tougher to trade, so you probably would have to do shares. But if, let's say we would have did 205 strike puts, you gapped lower and you held on because your stop on a longer time frame is that, hey, it needs to close above this 205 before I close it. Look at this nice little ride you would have had you held on to that. And that's exactly what I'm talking about here, guys. You know, there's no science, there's no rocket science. All you're doing is going through the charts until you find these. Obviously, there's no pattern here today, so this, you know, may actually just continue higher from here. But there's no pattern here. There's nothing for me to tell me, hey, go long or go short. This one would be a basic box in and just trade it whichever way you want to trade it, right? All right, so let's continue looking. All right. That's pretty much it, guys. I mean, obviously, I'm only going to go through this watch list. I'm not going to go through a bunch of others. But it's the setup is the same. You know, it doesn't matter if I use my watch list, if I use the market makers. At the end of the day, what you're looking for is reversal patterns. So, and obviously, all these watches are going to have pretty much the same stocks or repeated stocks. So it just doesn't matter. You can go through all the sectors individually, which I've done before. Hey, let me see how the automakers are doing, the techs, the FANGs. Let me go through them individually, you know, industrials, whatever. All the resources are here for you guys. So it's just use the resources that are here for you, you know, and go through that. So it's like, hey, all right, well, let me go through the auto industry, beverage, biotech, cannabis. Let me see what kind of patterns these specific stocks are making, especially if you come here to the Visualize tab and you see, hey, that one of these sectors is like just lighting up on fire and is like either red or massively green. You know, that's what you want to go through and see, okay, well, let me analyze these individually. Maybe I'll find a play within these. That way you keep your portfolio diversified and you're not playing everything in the same sector or whatever. But at the same time, like I always say, try to keep your number of trades to a maximum of 4. It'll make it a lot easier for you to manage if you're doing that, especially if you're doing swing or day trades. If you're doing spreads, you can do obviously a lot more because they work better in numbers. But when you're doing day and swing trades, the less you have, the easier it is for you to manage. So make sure that you come out on top. But that's pretty much it, guys, for today, for this video. I hope it was helpful. And that you guys learned something. If you have any questions, go ahead and leave them in the comments below. And I'll see you guys next time.